Hi, welcome to the Oak Trader report on the 19th of January. It's coming up to about 9 in the evening Hong Kong time. Just thought we'd cover BEAM here, ticker symbol BEAM. This is the 5-day chart where my mouse is 1 day, 2 days, 3 days, 4 days, and then the news of the takeover. And I have been studying takeovers. I don't yet have a strategy or too many clues, but I have some clues that I've worked on over a number of years, and it's something that I'm looking into. But you can see here the nice snaking flat line over this 4-day period, very tight range for where the price is. It ranged between 65.50 up to 67 and then rocketed all the way up to 83.41. Here it is on the weekly. Another reason I'm showing it to you is a lot of the charts we've covered in the last 2 or 3 Oak Trader reports have 5-year weekly patterns like this that are ready to take off. And this chart has already gone from say 65 up to 83.42. This chart was taken last week, the picture of it. But if you draw a line along here and then draw a line here, you can see the false breakout comes back down, making people believe that it doesn't have the energy to move higher. Then it moves higher again, and then it just mucks around for weeks, couple of months here, mucking around, making people think it's a dead stock, and up it goes. But this is a good example of a consolidation area after an upwards move, and you can see it here on the monthly, on the daily, which is covering 12 months, and you can see it moving up. This is the shakeout zoomed in, so to speak, going from 60 up to 70, then coming all the way back down again. But you can see the use of trend lines even with daily charts, drawing. You can see that the technical position here has moved above where my mouse is here and here. You could call this 3 steps. 1 step here, this is a big 2-step, and this is the 3rd step, and then you can see the market shooting up all the way up to 83.42. But it's just interesting to look at. I have a collection of charts with stocks that have had takeover announcements, and I have hundreds of them, and I've been going over them the last few years, trying to look for clues and to digest their price action. And I won't say that I'm nearly half the way there. I'm not even half the way there, but I have some ideas that may be useful at some point in the future. But a lot of the correlation to do with accumulation is exactly the same. It's just usually on a shorter term basis, so you're not seeing something being accumulated over 2 or 3 years. Sometimes when the word of a takeover's in, sometimes 2 or 3 months before the manipulation, the accumulation of the stock may begin. I just wanted to put up here the ARKview group. In no way am I representing them or have anything to do with them. I just feel it's great what they're doing, and I'm just mentioning them strictly from, I guess, a fan point of view, as a businessman's point of view, as someone that has noticed that capitalism in America, through these micro ventures companies that are coming out through Kickstarter, through other types of crowdfunding vehicles and platforms, that this type of funding platform is going to be very successful in the future. And this is one of the reasons why I feel America's got a great future ahead of it. I've been all over Asia, and a lot of the problems with young business people in Asia is raising money. Everything's so conservative here in that respect, and in America young entrepreneurs can go and raise money from all sorts of platforms now, and people have obviously got fed up with the listing process, and there's other reasons. A lot of companies are coming to the market much later on, like they're allowed 2,000 private shareholders now, so that stopped them listing earlier than they used to. But also there's so many other ways that they can raise financing through crowdfunding and through platforms like the ARKview group. And also there's another company that I was on their website yesterday, excellent company called microventures.com, and I love the way they've put the platform together, and I love the way the idea is developing. As far as what they're offering, I haven't got a clue whether it's good or bad, but I will be looking into it further and this is just another reason why I'm very positive on the future of America, because when someone needs capital, it's quite easy to find in America, whereas in Asia, they're still, many years behind in that respect. This is a company, ticker symbol SZYM, that's being touted around on the email promotion lists at the moment. The Motley Fool website, I think it's the Fool.com, yeah, that's it, the Fool.com are covering them. And I saw the email, and it's always very tantalizing, very bullet point driven. This is gonna change the world. This is the next best thing since sliced bread. So I thought I'd just take a look at the chart and see how it was developing. And you can see here that it's a $2 parameter. It's quite a new issue, so there's not much action at all to go off. Usually I like new issues that are dogging around at the bottom, so to speak. So I just thought I'd take a look at this, and you've got the shoulder here, you've got the bottom, the head, and then potentially another shoulder here, but I would not be buying this stock yet until it develops some serious price action that I could feel confident in. And at the moment, if you draw a line along there, this little bit has broken out on the upside, but I would be much more confident if you draw a line along the top, and somewhere around the $12 level, if it broke that after a period of good consolidation, i.e. accumulation, then I would feel a bit more confident about this stock. But at the moment, it's one to go on the watch list. The people at the Fool.com seem very confident in it, with touting it, so that's why I took a look at it, and it has had some pivotal points here where it showed strength as well, and it is quite a new issue. So we'll see how this develops. It's broken a long-term downtrend, but it hasn't broken the medium-term downtrend, and there's not really been a gradual downtrend, which I like to see being broken for it to burst out on the upside. This is the profile of it, the company, and I just wanted to go into this because just in one of my surfing the internet moments, I decided to check the company out, obviously not just the chart, but having a look at the different articles, and there was this one website that was talking about the process for the company, and why the Fool.com had recommended it. He covers all the promotions in these types of newsletters that are sent out. He checks them out, and there was some really good comments at the bottom of his article as well, and I just hammered home to me how difficult it is fundamental investing. It's very hard to know what is good, what is bad. It all sounds very good, the story, but again, when you read the comments, there's conflicting views. A lot of them are very positive, a lot of them are very negative, but there's some very intelligent comments on there, and I'll put the name of the website in a further broadcast. I was quite impressed with this guy. He seems to write articles, not going against what the touters, the promoters are saying. Sometimes he might agree with them, but he's got his own opinion, and he looks and checks into these stocks himself. But it just hammered home to me how difficult fundamental trading is, especially when you're dealing with these scientifically based companies where formulas, new ways of doing things can be developed, and even if they are developed, they may never see the light of day. It's very hard to know exactly which companies are going to do well in the next 5 or 10 years unless you're involved specifically and an expert in those areas. And that's why what I use to counterbalance it is price action. If I see good price action and accumulation, that's kind of like having an expert, an insider, so to speak, in the industry that understands what's actually going on. But as far as digesting all this information about this company myself, I just haven't got the hours to look into that type of deal. And again, I believe it wouldn't benefit me in terms of money, simply because on an average, trading from price action gives me much more of an opportunity to profit. Okay, this is the cotton chart here on the monthly. Just thought I'd show it here. You had a long-term downtrend being broken with this consolidation action here, and then you had the huge spike up back in 2011 and a massive cull and a big shakeout, a big distribution. And here you can see the market potentially consolidating. If we zoom in on the weekly, you'll see it looks kind of like consolidation accumulation, but I'm not 100% sure because it's had such a steep downtrend that you have to be careful within these markets. But studying the commodity markets previously, going over charts for 150 odd years, on average, quite a lot of them, when they do have a big spike like this and they come back down and consolidate, they tend to have another large spike up. So I'm just watching cotton at the moment, just seeing how it develops and just seeing if the market can curve around and looking for a point perhaps to go long on cotton. Now I just have to check this out over the next few weeks to be 100% sure, but well, I'd never be 100% sure, but to be more confident than I am now. But I feel a double spike may be coming in cotton, but I have to wait for price action to develop and to move into a technical position where I feel it's poised like a coil spring to spike upwards. So keep tuned on the cotton over the next couple of weeks, and we'll see where we are with that. This is the 3-year weekly chart, I believe. Just to zoom in it, and you can see the downtrend being broken, and then you can see the support coming into the market, and it's almost like a head and shoulders position. Shoulders, the head here where my mouse is, and then the shoulders here. What I don't like is this broken trend here, but again, I always expect a shakeout before a big move starts, so that potentially could be that. And if you look here from the top, you can see, if you draw a line down, that the market has broken a gradual downtrend with this particular action here. Now, as you know, if you've been following the Oak Trader report, I am quite positive on the USD at the moment and over the next 6 months to a year, perhaps 2 years, in quite a lot of different currencies, and the cotton seems to do quite well when the USD does okay for whatever reason. Now, I don't like to look too much into correlations because it's like the Pavlov dog technique. When the bell rings, the dogs expect food. If you continually look for correlations, and then 9 times out of 10 it works, and then the 10th time it doesn't, the 10th time can really hurt. So correlations sometimes are things that I look out for because it's natural within human makeup to look for correlations and patterns. Nassim Taleb talked about it in the Black Swan, but I believe here that the market is potentially getting ready for a spike. I won't be entirely confident until it breaks the sideways consolidation above the 90 area, and if it did break that and then we saw a couple of weeks of consolidation, forming a bit of a flat top, I would be exceedingly confident that the cotton market would have a double spike, and it would be something like what we saw back in 2011. But again, when the market dips like this and it's had such a big shakeout, you can't just anticipate and expect the market, because your opinion is slightly bullish, for it to go up. I have to wait for price action to confirm it, because this point and this point are lower than this point and this point. So you could have a wave type downtrend develop in here, and this could be a consolidation area within a downtrend. But I suspect that we're going to have a double spike. But again, I won't be taking a position until price action shows me that I've got a good chance of being right. This is the euro-dollar market. This market is based on American dollars in European banks. It always confuses even brokers that have been in the business for 10 or 15 years. I'm not sure why. They should know the markets, but it's based on the interest rate of American dollars in European banks. And you can see here, no one's getting any decent interest rates at all on American dollars in European banks. And long term, there's only one way this market's going to go, and that's down. Is it going to conform to, if we draw a mouse along here, previous trends, if we roughly draw it along, is it going to come back down to around here eventually? Or will it come back down even lower? I suspect, in the next, say, 15 years, it will be all the way down here. But again, this is almost like an arbitrage market, if you could take advantage of it in a physical way, because the ceiling is basically 100. It can't go above 100, because then that would signal 0% interest rate. So the market can't go above 100. So you've got minimal downside risk and maximum upside potential. And when I talk about upside potential, I mean profit. In terms of the market, longer term, short in this market, betting it's going down is the way to go, because they can't hold interest rates at these low levels forever. And you can see the periods before where they held them in a tight range, and it never lasted. And this one has been exceedingly long. So, expect in the next 6 months to a year for this market to come down to around perhaps the 99, 98. Who knows what's going to go on with the Fed? But again, as I said to you before, 100 means 0% interest rates for American dollars in European banks. So it's almost like an arbitrage situation where you've got no, in terms of downside risk, but in terms of the futures there would be, because the minute fluctuations would mean a leveraged trade. But there are smart ways to do this in the physical market, and especially if you feel that in terms of interest rates, the expectations may be for interest rates to go up, and that means this market will come down. And of course it's a longer term trade, but I feel there's only one way this market's going to go in the future, and that's down. And we should see it at around the 98 level at least in the next 2 years. Okay, this is the US dollar index based against a basket of currencies like the Canadian dollar, the Japanese yen, the British pound and the euro. And you can see here, if you looked at it on a monthly, that the big downtrend was broken, and then the trend upwards, if you draw a line here where my mouse is, has been broken by this action here. And that might have knocked a few of the long followers, the trend followers, out of the market. Quite often before a big move starts on the upside, it does knock out the trend followers. It's quite a well-known move to undertake if you're in the market. And if you see here going down, it's broken a downtrend, quite a steep one here with this little bit of action. I'm not entirely confident to say that the picture's looking good for an immediate rise up. I still think we may see some mucking around, and potentially we may even see a move back down for a double bottom. But I believe in the next couple of years the US dollar index will do very, very well against most of the currencies in this basket, especially the Canadian dollar. And I think it's shaping up quite nicely, the US dollar index, for a move upwards. And this is it on the monthly. You can see that big downtrend I was talking about being broken, and these get broken for a reason, because times change. But remember, the market always works in the future. So if you look at this consolidation area here where my mouse is, how much negativity was there about the US dollar? How many people were dumping the dollars and getting into gold and silver at exactly the wrong moments? And you can see here, I feel the market is set to move much higher from here. Could be wrong, as I said. It could head down depending on what Yellen gets up to, but I think once Obama's last year in office is out of the way, that'll be the signal for the dollar really to have the movement upwards, or it could start while he's in office. But I do believe the next couple of years will be very bullish for the US dollar index, or at least a year. And again, when I say something like that, price action and how it develops can always change an opinion. But again, with these types of moves in monthly charts, you're looking at 4 to 5 weeks of price action for me to change my mind. It's not something that's going to happen overnight. I'm not going to say, right, I've read an article and I'm negative now on the US dollar. I always wait for a decent amount of price action, and I feel that this market is shaping up quite nicely for a move up, and we could see it move up to around the 90 level at some point, maybe make a triple top. Maybe these points here are the new highs, and it will come back down and it will stay in this area for the next 10-15 years. But I think how it's developing now, if it can break this line here where my mouse is, along there, once it breaks out of that, we could see quite a spike upwards, and I'm definitely very bullish, and I have been for months, the US dollar versus the Canadian dollar, the loonie. This is the coffee monthly chart. Just thought I'd put it up here just to show you huge downtrends being broken, just following the long-term downtrends. You know, perfect signals to get long coffee back in 2002, 2003. Perfect uptrend being broken here. Remember, I was talking about the US dollar, the uptrend being broken. Sometimes before a big move start, you do see an uptrend being broken, just to get people out the market. Then a beautiful triangle formation, breakout triangle, and then the spike upwards, similar to cotton. Distribution here, and come rocketing back down. Not like copper and gold that, you know, took well, copper, you know, that's been up there for about 5 or 6 years. This one distributed really quick, as it has done in the past. Looking out for some consolidation at some point soon, perhaps an action like this. If I do see some action like that, I will be diverting some funds to trade this, because coffee's a great market. If you can get on the back of a 4 or 5 month move in the coffee market, it can be a very profitable undertaking. But again, it's something you have to be very careful with. It's a highly leveraged market. I haven't traded coffee for a while, but I believe it's $375 a point on the futures market. So every 1 point it goes up, $375. 10-point move, $3,750. So you can see spikes like this, you know, going from 120 even to 220. 100-point move, that's $37,000 for one contract. Of course, it's a lot harder to do in practice because of the rolling over of futures contracts, but if you can get it right, 1, 2, 3, 4, a 4-month move in the coffee market, if you can pick up a couple of contracts in that, once it's broken a few trend lines, it really can be a very profitable undertaking. But again, here there's no way been enough accumulation action for me to be satisfied about going long. You know, I still want to see this market develop and consolidate, and I feel that we're, you know, perhaps 3 or 4 months away from seeing any action. But again, it's on the watch list because of the potential of the market, and we'll see what happens and develops over the next couple of months. Just thought I'd put that on here. The link will be at the bottom of the video and on the website as well. It's something inspirational for people that want to live a long and healthy life. This guy's 78 years old, in great shape. Check out his video on YouTube. Okay, that's it for now, and I'll speak to you soon. Take care. Bye for now.